he can on day one sign 94 executive orders or 98 like Jolton Joe did and completely transform what the next 2 quarters look like.
Agreed.
So he could. I don't know that he will. I don't know if tariffs are really going in at 25% day one. I don't know that. But the challenging thing is if you're in the market, if you're in the stock market, you better be acutely aware of what you believe is going to happen, and your bet is going one way or the other. You're going to win.
You better be right, because
there's nothing that wins on both sides.
Exactly.
What does win on both sides is real estate, because it's either going to be appreciating or it's going to be so expensive to build that you have to rent, and that I've got you for more years.
As we get ready to wrap up another year, something we like to do on this channel is actually own our mistakes, our errors, and celebrate our wins. Unlike a lot of talking heads out there that only want to talk about the wins and then delete their bad calls. Yes, there are people out there that do that. It's very, very sad. But we like to own our mistakes and celebrate our victories. We're going to have this conversation with Matt and Dion. We go by the Three Amigos. Guys, Dion, we'll go to you first. Dion, how you doing?
Howdy, I'm doing great. I think I don't generally make calls, but we've talked about this, and I made 3 kind of calls this year. I got 1 right and 2 wrong.
Oh, I love that. I love, the beauty about being wrong and owning it is you can get smarter.
Mm-hmm.
You shouldn't hide your losses. Your losses are learning lessons, especially in the economy. I learn more from my bad calls than my right calls. So a lot of fun. Matt, how you doing, buddy?
I'm doing awesome. Excited to talk about all the things I got right this year.
Yeah. It's just going to delete the ones you got wrong.
Oh no, I got some wrong. Yeah.
There you go.
Yeah, for sure.
Well, Dion, we'll go to you first. We'll talk about, the right one or one of the 2 wrong ones. Where do you want to start off? What's the first one?
So the one that I got wrong that made the other one wrong is inflation. I was watching the trends 20, 21, 22, 23, and I figured inflation would be 5 to 7. It was just going to hover. We were doing the same things. We weren't, drilling for oil. We weren't doing, productive things that I could see that, my caveman brain that's uneducated would think would cause inflation to go down. And so the first one I got wrong is I expected inflation to stay above 5% pretty much the whole year.
Yeah, more sticky. Yeah, more sticky inflation. It makes total sense. I could certainly see that being a reasonable call at the time. Obviously today we just got PCE. It's down to 2.8 or something. So again, you didn't miss it by a lot, but yeah, I love the fact that we own those. How about you, Matt? You want to talk about something you got right or wrong?
We'll start off with right.
I like it.
With right. Only because Dion did one that was wrong.
Yep.
And I need to make him look like the bigger person because he is. So that kind of makes sense. So for me, one of the things that I got right and sadly still fell victim to was I believed housing was going to level off pricing wise on single families in my area. We were doing all that we could to push to get them done for the June phase of selling. Right. And we ended up about 10 weeks late. We ended up bringing all 3 products to the market about 10 weeks late in September. And boy, have we paid the price. Yeah. Stuff that was a guaranteed sale at $450 or $400. We've taken a reduction on each one. I'm not taking another reduction because I own them outright.
Right.
I'll take the medicine. But I was right. And because of our timing and we didn't get it done in time, I ended up paying the price for it anyway. So yeah. I was right, but I've taken the medicine. And so we have 2 properties still on market, still not selling.
Wow.
Now they're 60 days. We're not even getting disrespectful numbers. We're getting nothing. And so one of them we're going to pull. There's a couple showings on Friday, but we're going to pull it on Monday. And we can talk about why. But the other one is still on market. Since the election, the traffic has tripled. Since the election, the traffic has tripled as far as views and open houses and such. So that I was right on. But I'm still suffering from, we didn't capture the animal spirits that seemingly were really still here in June and are not here in November.
Yeah, timing when product lands is important.
Yeah.
Love that. I got a lot wrong this year, and again, I love owning these. So probably the first thing I got wrong was my recession call, right? And it's frankly embarrassing because it's this. I got it wrong the year before as well. It's like this never coming recession, and I've talked a lot about the fact that I think it's going to be a rolling recession. So this might be one of those things that I say I got wrong today, and in 9 months, the powers that be go, oh, look at that. It was actually our first declared rolling recession. So I have a little hope that call will be coming. But as we wrap up the year, it's very, very clear that we're not in a recession. We just had Q3's GDP prints this morning, again, 2.8%. Those are not recession level. Weekly unemployment claims at 213, not recession level. We just had mortgage applications, back to your point, Matt, up like 12% week on week. Again, animal spirits, or at least activity, is up significantly. So for 2 years in a row, and I'm not making this call again, I'm just going to wait. We certainly didn't have a classic recession. I am somewhat hopeful, but sheepish that I might be vindicated in a year or so when they call it a rolling recession. But yeah, dude, being wrong about a recession 2 years in a row does not feel good. That's for sure.
Get it?
Dion, what do you got next, Dion?
So this will be the other thing that I got wrong, and I'm going to cheat and use Matt's formula to prove that I'm right too. But so I got this wrong. Almost 2 years ago now, we all kind of made this bet where, Zuber, you called for medium home value to be up 5%. Matt, you called for down 10%.
Up to 10%. Yep. But 10%.
So you said medium price would be down 10%.
Yep.
And I called up 10%.
Yes.
Okay. So market wide, year over year, it's up almost 5%. So Zuber, you've almost like 100% nailed this is what happened, right? So since I called inflation in my head higher than it was, meaning it would take more dollars to acquire the assets, I expected the 10% growth. So here's where I'm going to cheat and use Matt's metric.
Okay.
There is no R in Washington State, but in Washington, the appreciation was 9.7%. So my local entire state, not just my market, my buy box, basically 10%. So
I like it.
We were talking market wide. I'm not going to call it a win. I'm not going to say I got it right. I'm just going to use that metric to say that's what I saw in my area. And it's a contributing factor to why I might sell my burr. So it might just become a live and flip then.
Yeah. Yeah. Again, I mean, total sidetrack, but I am shocked more people don't do live in flips. I legit shocked.
Yeah.
I think I told this story. Olivia and I were on a Crystal cruise, which is a crazy expensive 6-star cruise. And one of the couples, this is like 15 or 20 years ago, they were doing live-in flips in Beverly Hills.
Smart.
Right? They would go in, they'd buy the worst house in the best area. They'd spend 2 to 3 years remodeling everything. Then they would sell it. And because they were married, the first $500,000 in profit was tax-free.
Yep.
I don't know why more people don't do this, Dion.
So there's a YouTuber that I watched when I started getting really close to retirement because he talked about retiring, right? So we focus on what we want to learn. His name is Joe Kuhn. That's Kuhn. He invested in stocks. He used the 4% rule. He uses buckets. Totally. He says in many videos, I've never owned a rental. I don't do the rentals thing, right? So, but I wanted to know, how do you retire? As a side note, in his videos, he just casually mentions that they used to live in houses for a few years, fix them up, and then sell them and take the gains and invest it and start it over. So he's done the live and flip as a real estate investor, probably without even realizing how much that contributed to being able to reach financial freedom.
Oh, I mean, again, I'm shocked more people don't do this because, again, I mean, just think about baby boomers. A lot of them are empty nesters now, right? You know, a live and flip, again, the qualifications are you have to live in it. It has to be a primary for 2 years. But if you buy a big enough house and you don't have little babies running around, how easy it is just to remodel a bathroom at a time or a kitchen. And, it shocks me that more people don't, do live and flips, but we'll save that for another discussion. Matt, what's the next thing about 25 or 24? Sorry.
The next thing about 24 was, I thought rents would go down. I didn't think that they would keep on going up. And so that was correct. I took people that I had that were renewing, and I actually renewed them another year. And I said, hey, great news. We're going to renew you at 5%. And thank God that I did, because again, for me, it's a little bit more difficult because there's times in my market that are just deader than dead, like now.
Yeah.
And so to that end, the same way that Dion cheated in his local market, kind of that same idea was in my local market. We had all the CMAs, we had all the paperwork, we had all the numbers showing that this house should have sold for 450 all day long. That was a number based on comps, based on appraisals, based on everything. That was the number 450. That was less than what it appraised for. It appraised for like 459. Well, we're at 400 and we still don't have a deal. So I'm more than 10%. I still don't have a deal.
Right.
But again, what this proves to everybody is we know our market's cold.
Yeah.
We know our market's inside and out, and that's where you invest. However, from a national perspective, I just think that honestly, from a national perspective, there's too many moving parts.
Yeah.
And so much can be affected. The lesson that I learned from this was there's too many moving parts nationally. And so it's all about your local and where you're investing, because there's certain things in my area that tipped the scale. Local politics, local policy, nothing national, local politics, local policy that changed, that all of a sudden ticked things down. And you'll find those things locally that will tick things up. Clearly, there aren't enough people that hate ridiculous government, and they still are buying where Dion is. But that's kind of the craziness, is that it showed me that it is hyper local, and that's where I want to focus, because I still think nationally, I think it's anybody's guess, because it's about having that many more, that many people saying yes and that many people saying no. And then how does the world convert on that? Like if you'd asked me, I'd have thought that California would have been bankrupt and fallen into the ocean 10 years ago, and they're still one of the top 10, economies in the world. And it's just like, I mean, no matter what King Newsom does, he can't F it up enough to fully break it. So who's the guy that finally ends up breaking it, or person that ends up breaking it? It'll be interesting to see. But that's the biggest lesson I learned from 2024 was it doesn't matter how much I look at the national numbers and look at policy and Fed policy. What I've learned is that very quickly, the entire market can be shifted based on what one person says.
Yeah. No, I think there's a lot of wise wisdom, and I would hope everybody watching this intimately knows their area, their buy box. Watching the national number is really meaningless, except for people that have been doing it for decades,
right?
Like myself,
maybe.
Who see it. I see the U.S. economy where housing is a part of it, a significant part, but just a part, kind of like a Rubik's cube. It's my personal puzzle, and it's joyful for me trying to figure out and put this all together. But most of the people watching this, please take Dion's story, take Matt's story, know your buy box, know your area more than anybody else, because that's what matters.
That's right.
Right. In both cases, Dion's right. He got 10% up. Matt was right. He got 10% down. Local guys should know local things. But again, nationally, we got the 5%, which I called. So I'll take the victory on that one.
The good news is Dan and I never make forecasts for how much your real estate's going to go up. So that's the most important thing, because we have no idea. Like,
exactly.
It's like we're not buying for appreciation or depreciation. We're buying only based on income. That's it.
I love that. Well, the second thing that I got wrong, and I will own, is in the early parts of the year, I thought that 30-year mortgage rates would be at or around 6, maybe the high 5s. About summertime, I started to change that, right? Maybe late August, September, I started getting in this, higher for longer buy box. So I certainly adjusted it and feel good about my 7% call from here. But the early part of the year, I thought rates would be probably a point lower than they are now as we end the year. I did pivot, right? So I don't change often, but I did change on that one. So that was fun. Dion, what's your third one?
So this would be the one that I got right, ironically, just the one that you just talked about. I think people have short memories, and so many people were calling for rates to be in the 4s and 5s because we just saw 3. And I'm thinking, okay, well, in 50 years, I saw a 3.
Right.
Right. I started investing in the 9s. most of my stuff from 2015 to 2018 was in the 6.7s.
Mhm.
And so I thought all of 2024, especially when I thought inflation was going to be higher,
Right.
that that wouldn't be high enough for rates to come down to spur the economy. I thought we would see 7s and 8s all year long. We've dipped down below 7 a little bit, but it comes back up.
Yeah.
And so I think the thing I got right was that's where rates are.
Yep.
And I've had so many people say, "Well, it's really hard to buy. Interest rates are at 7." I said, "Yeah, that's kind of lower than when I started." And they'll go,
Yeah.
"Yeah, that was back in the dinosaur days when properties cost 2 tacos and a goat." And I said, "Yeah." And rent was a half of what it is now. So there are just as many cash flowing deals on the MLS today as when I've started. And everybody says, "Well, that doesn't track." Because yeah, it took me 2 years to find each one in the beginning. So it's not like they're just low hanging.
It's not easy. Yeah.
It's not easy. It took a lot of work, but they're still there.
Right.
So.
I love that. I love that. Matt, what's the third one you want to throw out there about 2024?
I thought recession by now. Honestly, thought recession by now, and don't fight the tape.
Yeah.
Don't fight the tape. And you know what the tape is? The tape is the election. That's what I got wrong, I think. Because now that the election results are in, we just unprecedented. We brought 4 units to market. I'm sitting there in my oh man, I am screwed. We got all 4.
Now, when you say when you say market, so the audience knows, these aren't for sale like the other 2 flips.
Nope.
These are vacant units.
Yep, rents. Yeah. So we brought 4 units to market to rent. That's a problem.
Yeah,
The
November.
week
That's
before
a problem.
Thanksgiving. That's a problem. Yeah. That December. That's a problem.
Right.
What was really interesting was, so we tried marketing for a week at the current prices.
Okay.
Nothing.
We
rented at a slightly reduced price. 5%, maybe 7%.
Okay.
All of them rented within a weekend.
Wow. That's not normal.
Nope. It is not normal at all for this market. It's already cold here. We've had some days in the 50s, which is nice, but most of our days are in the 20s. Right. So it's cold. People don't want to move now. We've had some really cold rain, but that's what we found. We adjusted all of these numbers about not all of them. 2 out of the 4 were down about 5%. One was down 9, one was down 5. One was up 5, and one was up about 10. So -10 or -9 to +10 on these 4 units. The ones that went up were the ones that had tenants for a longer period of time, as you can imagine.
Yep,
the ones that went down were the ones that had people that had been in there for a year or 18 months.
Right. Yeah. It is very clear, because I talk to, millionaires, real estate guys, entrepreneurs every week. You guys know this. All of them are telling me that there's been a vibe shift post-election.
Yeah.
It's wild to think about. So the 2 things I got wrong, recession and rates, something I got right again was transactions. We are in a transaction crash. We did post a cycle low, which I called almost to the number. There's very likely that we'll do sub 4 million for the year. I am making a rather bold call about 2025 that I frankly don't feel as good about today that I did 2 weeks ago. And that is that 2025 will be the cycle low. So we're going to do 2, 3, 4% lower in 25. The reason I made that call is I went back and studied the 54-year spreadsheet. And from 1978 to 1981, right, 82, that 4-year period, it took 4 years to hit the bottom in transactions.
Yeah.
And, again, I don't think history repeats itself, but it does rhyme. So that's what led me to make the call. And then for the real estate agents and the mortgage brokers and everybody who's impacted by transactions, great news. 2026 should see a 20 to 25% jump in transactions. It'll be from a low number, but everybody in the business, you're going to be competing with a lot less people, right? If there's 100 transactions that go to 50, but the people that work them go from 200 to 70, the last 70 are going to feast, right? It'll be like a buffet. So I was right about transaction crash and not price crash, right? Which drives people crazy. The crash bros go insane. Their haters come out of the woodwork. But give me my flowers. I got the transaction crash right and prices no. Why are you hating on me? So it's crazy, these guys. So Dion, other thoughts?
I rarely make calls on the market, on prices, rates, rents, because I think the two things that tell you to buy aren't any of that.
Right.
It's, are you ready? Did you find a great deal? So it's really simple for me when I'm going to buy. I think 2025, we will see 5 million transactions. And I think here I got two reasons why. Because 6 million is a normal market, right?
Mm-hmm.
On average.
Yeah.
So we won't be at normal. We'll be increased from where we are for two reasons. One, inventory is now spiking to the numbers it was in 2019.
Yep.
And every Crash Bro video out there is going to be inventory is where it is in 2019. And my call is going to be, okay, so if it was at where it's at in 2019, how many crashes have we seen since then? Like there's been zero at that amount. So
there's a logic hole in their argument. Yeah.
But the second thing is, earlier I said people have short memories, and what we have now is 2 years, 2023, 2024, where we have 7s and 8s on the interest rates. So in 2025, we're going to have people with these short memories going, well, we've had 2 years like this. This is kind of normal. I can find my deals. So I see transactions improving drastically for next year, but not back to normal.
That's I love that logic. Frankly, I think the entire real estate industry hopes you're right. Right?
I hope so too.
That's a 25% increase from 4 to 5 million. I don't know, Matt, what do you think about that? What do you think transactions? Sub 4 or above 4, 5 million? Where do you want to be?
I think between 4 and 5. I think that I
yes.
believe it. Well, yeah, just because I think that there's going to be a tailwind, towards the end of the year after, if we see inventory to continue to build, you're still going to have a certain number of people that need to buy. But I think that it depends on the market. In my market, single family homes are still not selling. You put a dupe, a tri, or a quad on there, and there's 7 offers still.
Gone. Yeah.
That's just, that's our market. And so what other markets parrot that? It's states that have income tax versus property tax. We're a very heavy property tax state. Guess who the other states are that are struggling right now? Florida, Texas. It's because they have big property taxes and they don't have these income taxes. That's why. Right. So that's that other little, local thing. That's that other little local political thing that makes the change, that tilts the scales in a different direction. So yeah, I'm interested mostly in 2025 to see what happens in the first 6 months, to see if my call for median housing, it going down, was I off by a quarter or two, or was I completely wrong? Right. Because I could be early. I could also be or I could have just completely missed the boat. It goes up, and I was completely wrong, and that never happens. I'm interested to see over the next couple of quarters, does that actually happen?
There you go. Well, Dion, I'm going to go back to you on your 5 million call. I think I love the fact that you make those calls. Thank you for that, because I know you don't do those, and you're all of those things. But I like just putting it out there. So I have 2 questions. In order to get to 5 million. How should I ask this question? I guess I'll ask it this way. What do you see happening to prices? Do you think prices coming down? Back to Matt's point, he's early on the price call that, maybe prices go down 10% and that spurs demand. Is that part of your equation or no?
So there's a couple things. One, it's the short memories, people being used to rates being in the 7s and 8s. Right now, last year, people were remembering 3s.
Right.
And constantly hearing about everybody who refinanced or purchased at a 3. So why would I buy it at 6? This is dumb. Right. Well, now they're thinking, okay, it's going to stay here for a while. Now we can look at maybe decades and it hasn't been that low ever. But the other metric that's making me think the purchases happen. I don't think price increases. I think we get that 10% increase I was calling for this year. I think, like Matt, I was off a year, comes next year. Okay. I don't see prices spiking much more because I don't think we turn the printer on and money just goes crazy again. Okay. But we have, in 2020, more people started working remote. Now you've got a very small percentage of the workforce, tech, saying return to the office or we're going to fire you. Mm-hmm. But half the people out there can work remotely. It's like 44% can work remotely right now. And next year, they start to hit that second and third year in a remote position where they start to feel like, okay, I've been renting out of the city where it's better. And I have this fear of getting called back to the office, but it hasn't happened for 2 years now. So I think I'm going to look at buying. And I think so the remote work buying surge can happen mid to the end of next year. And that
I love that
drives up the transactions.
Yeah, and again, you are absolutely right. Consumers are predictable. When 6% mortgage rates feel bad, when you're used to 3. When 6 feels good, when you're used to 8. It's just that simple. That simple.
Sure.
So okay, so there's that question. Again, the other variable in your 5 million call to me is interest rates. Do you see interest rates coming down? Call it 100 basis points? Nope. Just
Well,
people
100
are
basis points. Yeah, I thought when you say coming down like into the 5s or something, no. I think mortgage rates can hit 6 throughout 2025.
Okay.
I think yeah. So that's
that would make sense.
100. Yeah.
Yeah, it is. Yeah, I mean, I would give you 100 on that.
6 sounds better than 7 something.
Oh, exactly. Yeah. Again, consumers are very predictable, especially if you've been waiting a couple of years. Maybe you wrote some offers and got outbid. There just becomes a point where you're like, damn it, let's buy one. So, then your call on remote work, I think, is very intelligent as well.
Yeah. In 2013, I think I had an 8 something. So in 2015 and 2018, when I was buying in the 6s, I was like, this is amazing. This will never happen again. And then all of a sudden 3s, and I'm like, refinance everything.
Yeah. Matt, let's go back to you again. Both of us admitted something we got wrong last year was a recession call. Do you think this big, deep and dark, scary recession might, stick its head up in the first half of next year? Again, maybe you were early or we were early.
I mean, I tell you, I've lost all faith in government numbers. I mean, like 8 months, like you revise 8 months in a row. Yeah. Like, come on, 8 months in a row. Like you can miss one up and down or a little bit, but miss 8 months in a row and go, whoops, we missed 1 million jobs. That was our bad. Sorry. Yeah. So I'm concerned because I don't know what's going to happen with Trump is a game changer. The orange man is a game changer. That's what he does. He can on day one sign 94 executive orders or 98 like Jolton Joe did and completely transform what the next 2 quarters look like.
Agreed.
So he could. I don't know that he will. I don't know if tariffs are really going in at 25% day one. I don't know that. But the challenging thing is if you're in the market, if you're in the stock market, you better be acutely aware of what you believe is going to happen. And your bet is going one way or the other. You're going to win.
You better be right. Cause
there's nothing that wins on both sides.
Exactly.
What does win on both sides is real estate because it's either going to be appreciating or it's going to be so expensive to build that you have to rent and that I've got you for more years. Right. So so that's where I think the challenge is. I'm very interested to see. I could be completely wrong about the recession call that I made. That I'm wrong about it for 2024. I'm wrong about 10% down on median home sales price of existing homes. I'm wrong on that for 2024. Does it come true in 2025? Don't know. But at that same time too, I'm interested to see over the next 2 quarters what actually happens. I can tell you this. In Q2 of 2025, I will not be making the same call for the next 3.5 years saying that median house pricing is going to go down 10%. I will not be making the same call every 2 quarters for the next 4 years, hoping it's going to come true. I'm trying to see the future to see exactly what happens so I can then go back and go, what part of the equation did I miss?
Right.
That it then didn't come true. I thought that job losses, I told you, I thought unemployment would be in the 5s, but could even spike to 7 if it went really badly.
I remember.
I think the wrong candidate won for me to get my 7% unemployment. Mm-hmm. I think if the other candidate had won, I think I'd have hit a lot of my numbers. Mm-hmm. But Orange Man won, and that's good for some and good for others and bad for others. But I'm just interested to see how it all unfolds because this is what we use to recalibrate our takes.
Yeah. When I think about 2025, again, it's kind of my call for real estate as well. I am particularly nervous about the first 6 months, kind of to what you said. We don't know what's going to be signed on January 20th.
Yep. Don't know.
Right. These executive orders could be amazing, could be a problem. Right. If you come in with a sledgehammer and slap 60% on Mexico and Canada and Europe and that's a problem.
Yeah.
Right. That will cause the system to show cracks and who knows what happens. Right. It's a thought experiment. Mm-hmm. I am particularly nervous about the first half of 2025, but when I look out past that, kind of like again in real estate, I think 2026, 2027, 2028, again, as I sit here today, kind of feel okay. But yeah. And then I guess the last thing to talk about that I got right that we should acknowledge was commercial real estate. Again, we have seen a 20 to 30% decline in Class A properties. Again, when I say commercial here, it's multifamily. We did get a lot of that right. I will admit that I thought Class B and Class C would start to retrade. It still hasn't. Transactions are down between 80 and 90% in those markets. So it's frozen. It'll be really interesting to me if Class B and Class C start to trade at discounts next year, or if banks just keep extending. There was a Realtor article that was amazing. It talked about banks. They're not extending and pretending this time. They're just extending, because what they're doing is they're printing money. Yes. They're getting higher interest rates. They're getting your rate lock-ins. As long as the operator is able to limp along and make the payments, they're like, great, we're printing money. So it'll be interesting to me to see if Class B and Class C starts to trade. But yeah, commercial was something I got right. Yeah, Dion, let's wrap this section up. Closing thoughts.
Closing thoughts would be a question to Matt.
Oh, sweet Lord.
So you're calling for the 10% down all this year. We're pretty much ending this year 5% up.
We'll see.
Does that mean if you stand by your call, you see a 15% drop from now?
No, it means that I see from the idea was from peak a 10% correction. So from peak, whatever the peak is. So if now is the highest, if now is the absolute highest median housing has ever been, and we'll have to share which charts we're looking at, but whichever is the highest of median home sales, to a 10% correction from that. Because I believe that there was going to be a 10% correction. What I believe was going to push that along was going to be unemployment being, happening quickly.
Yeah.
And then also, right. 5, 6, and the thing is that I believe, based on talking to a lot of my friends that are executives, I believe that we're going to see that likely in Q1, a massive amount of layoffs.
Yeah. I don't know. Again, this vibe shift, it's going to be interesting.
I think so here's what everybody's doing. Because Mike, you and I are dealing with a bunch of other vice presidents of VPs of sales, directors, CEOs, CIOs, right? These are our circle of friends.
Yep.
So I'm having these conversations with them and I'm saying, he goes, we kind of thought that she actually might win. And at that point we had round 1, round 2, and round 3 in queue. We knew the rounds we were going to go, and we knew we were going to start cutting. We were going to start cutting heavy. That was the answer that I've gotten from a number of people. Now, the answer I'm getting now is the orange guy won. Because the orange guy won, we're kind of in a wait and see. We got to wait and see what he's going to do in the next 90. Because even with like the billions of dollars now that the Biden administration is handing out on that CHIPS Act, that go and tell me that the $8 billion that Intel just got doesn't impact them not laying off 10,000 employees before the end of the year. Of course it does. So that's where the game changer is. So everybody now still has it locked and loaded, but I think now they're much more wait and see, because I think now they expect that something is going to be done, like a much lower tax rate, or, hold on to your employees and don't do layoffs. And here's the incentive.
Yeah. It's funny. It's funny you talk about this, because again, I live in the Silicon Valley. A lot of my network, because I was here 50 years, is Silicon Valley executives. And I actually talked about this with Dana Dunford, who's also a Silicon Valley senior executive. And the quiet talks at the holiday parties and all of that was very different this year.
Very.
And a lot of the Valley, everybody looks at the Valley and, probably 90-10 Democrat versus Republican. It was not that this year, which is pretty interesting. But to your point, several executives I talked to were talking about restructuring, which is code for layoffs, if you don't know what that means, pre-election. And I've caught up with most of them, and they said they've thrown those plans away. Now, they're not going on hiring binges. Let's be clear. They're not hiring. Correct. But they're willing to go, you know what? Let's run what we have for 6 months. It's just a different vibe. It's weird. Dion?
So we run in different circles, you guys being kind of in the tech and everything. I'm in transportation. I'm still friends with several owners of companies and gravel pits. And so what we've seen for the end of 2023 and most of 2024 wasn't layoffs, wasn't plans for growth. It was almost a hiring freeze. It was only when they had employee turnover, there wasn't a lot of growth, right? They'll predict 5 to 20% growth most years. And then this last year, it was been pretty flat. So for next year, they're predicting, the guys that I interact with that are saying, how's your school doing? How's your student production going to be for next year? I'm like, well, we connect you with the right guy.
Don't know, don't care.
There were hundreds of thousands of jobs created with the pipeline. Just let's get ready for that. And then it went away.
Yep.
So production, warehouse, transportation, they're all preparing for normally towards the next month of the holiday season. They hire 20%, and then in January, February, they let go 15%. So they kept the 5%, the cream of the crop. That's an annual FedEx, UPS, all of that does that every year. Well, the guys I've talked to are planning on, we need our next like 5 to 20% growth that we keep for next year, because they're predicting that much more.
That makes sense.
In U.S. employment, right?
Keystone alone.
Yeah.
Keystone alone. If Keystone happens.
Right. So Keystone happens, and what it does in transportation is it draws the drivers that have the ability to go there.
Right there.
And they triple their income. But what that does is it opens up positions here.
Correct.
In the 100 to 130,000 a year range, starting jobs.
Correct.
So it's that trickle down economy where it just affects everything. So the circles I'm in, they're literally the opposite. They're not in. This year was just not laying off. It's just we're not growing. We're not hiring anybody. They're not predicting that for next year.
Man, this has been a lot of fun, a lot of great conversation. I appreciate the fact that we're different than lots of folks, that we will own our mistakes and celebrate our victories. We don't delete videos and things of that nature. One more time, guys, where can they find you? Let's go Dion first.
Here on YouTube, Dion Talk Financial Freedom, where I do live streams every Tuesday at 4 p.m. Pacific. You guys are amazing. And Matt?
Lumberjack Landlord, Thursday nights at 9 p.m. Eastern time. We talk about all the things it takes to either manage your manager who's managing your properties, or manage them yourself.
There you go. Guys, you're amazing. Thank you for being here. And of course, happy Thanksgiving.
Happy Thanksgiving, boys.
Ciao.